What is up? What is up, y'all? What is up? Hope y'all are having a good weekend so far. Hope y'all are having a good weekend so far. I know I am. Gonna do a little back testing session. I don't know how long it'll be, but I'm gonna just go over some things and kind of talk about a little bit of what I look for and stuff like that. So let's get started here. So I'm kind of just gonna go with the motions here, and you know, I might discuss some things as I go, and some things I might, just kind of do so you guys can visually see how I back test. And I don't pay for TradingView, so I can't go back like super far on the 4 hour, 1 hour 15 or whatever. So let's get into it. Let's do green on the monthly here. So I always just like to mess around and you know see areas that have like old setups, right? And we are back testing, so things are not going to be the cleanest. But bear with me on that. So what I'm doing right now is just marking up all sorts of points of structure that I see in the market on the monthly time frame here, and then we're going to go down into the weekly and the daily and the 4 hour and all of that, and I guess until I get tired of it. So yeah, right now I'm just marking up some points of interest that we can potentially look at, basing off of last points of sells and last points of buying before a huge move to the downside. So we go back to the candlesticks and see moves like this. Like, you see how the line chart doesn't get all the way down to this structure, but then you see that nice wick rejection right here, right? So don't be scared to use the line chart because it can help out a lot. So that's all my points of interest on the monthly. You see also right here too, this area as well. It doesn't look like it got up here on the line chart, but when you go back to the candlesticks, right, you see this huge monthly candle, month of September, right, gave a huge wick and then came back down and closed under this point of supply here. So yeah, this things you got to look at in the line charts as well. So let's go down to the weekly, and now we're just going to look at these areas that we had marked up on the monthly, right? So we're mapping out the highs and lows. We'll do a different color for the weekly. Let's go to blue. Right, so what do we see? You see where that monthly point of interest is, right? But if we go down to the weekly, there's another last selling candle before this huge buy to the upside. So I'm looking right here, right? This last down candle before this big move to the upside. And we can see, right, this move to the upside broke structure, giving us a higher high on the weekly scale. So when we look down here, we have a rejection. And what does this rejection also give us, right? Another break of structure. And from the retracement from this lower high, right? Because this would be bullish, right? Or excuse me, higher low, right? Higher high, higher high, higher low. And then what do we have? Another higher high, because this is higher than this high here. So we have a break of structure there. And where does price come back down into? This area here, right? And you see nice entries right off of that area there. Same thing here, right? Same thing. So price makes a lower low, yes, but look at look at how it does. It's grabbing liquidity, and then what does it do? It goes back into that bullish order flow where the higher time frame is trying to go anyway. So from this low, right, this low, and then this high, we have that trading range, right? And what I mean by that is, in between a trading range like this with a broken structure, we know that price has to retrace somewhere to give us a continuation in price. And you see right here, right, this is where that previous structure was broken, and we look in this area here, and there's some rejections from this last sell before this buy to the upside. Now moving on, right, and this is where things, the impatient people, right, we see these little points of structure right here, where there's no retracements, right? But on the lower time frames in this area, there probably is. So there's no retracement, no retracement, no retracement. And what do? Well, we just sit and wait and see if, any setups present itself in the future. Same thing with right here, right? So we see this consolidated area right here, and then a move to the upside right here, right? This push to the upside. But you see this little retracement right here. It doesn't come back to, let's say, this structure or this structure here. Price doesn't come back to these areas here, right? So what does it do? It gives us a retracement and then a huge push again to the upside. So where are we looking at? We're looking at the last bit of selling before a huge impulsive move to the upside, right? So where is that at? Right here. And you can see nicely there is a rejection from that area. And same thing can go for right here as well, because we had a retracement in this area, and you see price start to make lower highs and breaks this low, right? And from this range here, from this high to this lower low, right, we have a trading range. So you can look in this area right here, which we will get to hopefully on a lower time frame, right? So we're in a range of a low being broken, but yet you see broken structure here as well. And where is this last bit of structure? You see on, let me delete this, there. So from this high to this low, right? Price from here doesn't come and make a new low. We have that shift in market structure right here. And where is the last bit of selling in this area? Right here. And we can see that clearly on the line chart as well right here. So if I drew a point of interest in that area and went back to the line chart, you see there is a clear rejection from that area, about 500 pips exact. So that's a great move. But now talking about from this area here, from that range, from this high to this low here, right? What happens here on the lower time frame? I can guarantee you, right? You can see a sell, buy, and then a bigger push to the downside with this candle on the weekly time frame, right? And look at where price goes. Respects that, right? So from this area here, from that rejection, or even here, right, we didn't get any push higher than this area. Didn't get a push higher here, and didn't get a push higher there, right? So we could be looking in this area here. Now look what happens. Look what happens. From this lower high, we break structure here. And I say lower high because this high is lower than this one, right? Than this high. And what happens from this range in here, right? Well, price comes down and breaks structure in this area. Price comes down and breaks structure in this area, giving us a new low, right? Now, where is the trading range from this high to this low? We could expect a retracement, right? You could say here's a bit of buying, but ultimately, supply is high and demand is low. So every time you get a break of structure, right, you ideally want to look at the highest point of supply and the lowest point of demand. So we see that. Here's a good setup. 360, 70 pips. But what happens in this area here, right? Because we can see that, there was a retracement in this area here, and then this high got broken for that shift in structure, right? Right here. So where are we looking? Last bit of selling in this area, or even this candle here, it doesn't matter. Look at where price rejects. You have all three of these areas that you could be looking at, right? 1, 2, 3 areas. Ideally this one or this one, because this move didn't get all the way back down into that area. But you know, not every setup is going to be like the last setup, you could say. Uh, so you could have been buying in this area to take out this high, right? So what would that have been? 40 pips, and then take out that high, 691 pips for that win on that trade. That would have been a really good return on your investment. Now what happens here again? Because on the lower time frame, right, this is structured, but on the weekly time frame, it's just a wick. But if I do this, right, then you can see broken structure, broken structure. Where does price come back down to? The last bit of selling before this push back up to the upside. So go back to the line chart, or the candles, and yes, it is messy. Not every trade is going to be the cleanest. This has a probably a wider bit of drawdown, but you know, just for the sake of back testing, this also would have gave you a 135 pip move as well. Now what happens, right? What happens? We see a huge push to the downside, right? And let's look at this area here, right? We see this has been tested, right? We see that this has been tested, but this area necessarily hasn't been tested yet, right? And a lot of this would be cleaner too on the lower time frames as well. But if you look in this area, you see our green line where that monthly point of interest was. What do we have, right? A minor shift in structure here, which, you know, on the lower time frame, I'm sure there's probably some moves in this area here to be selling. But our last bit of buying was right here, right? Right here. And you see price come back up into that area, right? It does go past a little bit, taps on that that monthly point of interest again, and pushes to the downside. Now there's a bit of structure right here that you guys can see, right? Does it come back and retest that? Yes, it does, right here. So, and then it gives us another break of structure from this area here, 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 right? Does it come back and retest this? Yes, it does, right here. We get another push to the downside. Does it come back and retest? Yes, it does. Does it come back and retest? Yes, it does. So all these areas off of this monthly point of interest, this green line, right, could have been nice sells. So let me see what it is from this first realistic setup, right, to this low. 750 pips plus. That went even further than expected. But from that monthly point of interest, let me see, all the way down to the other monthly point of interest, you're at 1,750 pips. So that's pretty crazy. All right, let's look at the next weekly or monthly point of interest here. And also, guys, these can be refined. Your point of interest can also be refined on the lower time frames as well. So like in these areas here, if you see a cleaner setup, like on the like say the next time frame down, where on the weekly you go down to the daily and something looks cleaner, where maybe it's like a 50% type of move here, and you see that it hits 50% to the T on this setup right here. I can't get it right, but to the T on that setup. Now look here, right? So price comes down into that monthly area, but we need to create some type of structure that needs to be broken, right? And from here, the last high is way up here. So does this structure break this high? No, right? Price dips back down again, and again, right? And what happens? From this low, right? Where's the last high at? Right here. See? Lower low, lower high, lower low, and then break structure, higher high, right? So here's the last high in that area, okay? And what happens? We get a new higher high. So where should we be looking? Well, we see on the weekly time frame on the line chart, we have a last bit of selling area, and in that trading range that I had spoke about, price comes back down, and now you have that weekly and that monthly point of interest that you're looking at. So in this area here, in this area, right, there could be a break of structure on the 4 hour or the 1 hour, or for me the 15-minute maybe, right? And you could catch a good entry in this area. Huge break of structure here. Price doesn't come back, but we do create liquidity in this area, right? So we'll see if price can take that out, right? Now, I don't know if you guys remember on a stream that I talked about the plane taking off, right? If a plane gradually takes off, it's going to catch its altitude and coast comfortably. But if a plane takes off like this, straight off the airstrip, it's gonna come right back down. So you can see right here, there's not much buildup of velocity in an airplane sense. It just comes straight up and then straight back down. And where is our last bit of buying? Here, right? Well, did it hit that area? No, it didn't. But look at what is in this area here. We have inefficiency, a huge gap of inefficiency, fair value gap. And if we went 50% from that area, I'm sorry, if we went 50% from that area here, right, now we can look and see how price reacts in that area on the lower time frame, on a lower time frame. So let's keep moving along here. Same thing right here as well, which price didn't hit this area, but you can see price comes up super fast and back down. Here's the last bit of buying in this area, and price doesn't hit, right? And that's what happens. Sometimes that happens, and that's okay. We're gonna look at this area on the daily maybe. See liquidity captured here, this long wick, right? And I'm sure somewhere in this area, right, there were setups somewhere in that area, possibly on a lower time frame. See, and then look, last bit of selling before a buy, you can see in this area, right? The line chart hits that area, but it doesn't hit this one. But look what happens when I go back to the candlestick, right? Price dips down into that area of this last selling candle before a break of structure. Where is the break of structure? Well, look, we had liquidity grab here, we had a shift in market structure here, and we have a break of structure here giving us a new higher high because this high is higher than this one right here. So let's go to the daily. Let's go. Let's go red for the daily. What if candlesticks still look like this? It might make it might make things easier to trade because a lot of the times wicks can confuse people a lot. But we have a break of structure here. Here, where does price return back to? This area right here, and it gives us a huge push to the downside, all the way back down to this demand area here. Right there, I bet you if price had I bet you if price had wicks back in the day, this would have tapped this area here. See these breaks of structure, right? Last area of selling, demand area. Now, mind you guys, this is back in 2002, 2002. So there's not any wicks on these setups, but if you look closely, right, just imagine a wick that goes through that area, because I guarantee you that's what would have happened, or how it would look in today's market. So no retracement here, could have possibly been another wick setup as well, but the candlesticks look without the wicks, they look weird. I think it's because we're so used to seeing the market with wicks that some of you guys don't back test enough to get that muscle memory and plant that in your brain. A lot of you don't know how to back test. A lot of you like to do forward testing and say that that's practice, but I highly disagree. You can't practice when you're putting your money, when you're risking your money. Like, that's not the proper way to practice. You need to have a solid base. You need to get the fundamental basics down in the market before you even risk any money. And if you're not practicing anything, if you're not practicing on your trading, how are you going to know what you look for in the market? It makes no sense, right? So stop saying that you know, when you're forward testing, you're taking actual trades. Your progression in trading will take much longer than, you know, if you just spent a couple hours practicing and back testing like we are right now. Break of structure to the downside. Price finally reaches that range from that high to this low here and gives us a nice rejection, right? This was the area that I wanted to look at, I think, on the weekly time frame. Now I know this is hindsight, but if you look down here, there is a small candle, oops, right here, right? And like I said, guys, with the way the charts used to look, you have to imagine that there are wicks right here in this area. So let's go to an actual with the wicks here. Break of structure, price retraces back up into that area and then breaks structure again, retraces back up into that area and continues to the downside. So here's this area, right? Look right in here. And this is perfect because this was on the weekly time frame, correct? So huge push to the upside, boom, right? And then again right here. And now we made our way back down into that monthly and that weekly point of interest where I had this circle. So look what happens, right? Price comes down, doesn't break this low here. It doesn't break the low, right? So what happens? Price gives us a huge push to the upside again. And where is that last selling candle before this push to the upside? So we have this sell, buy, sell, buy, right? So the last sell would be right here, right? And that could have been a good setup as well. Price comes up, doesn't really break structure here, here, or here. Price doesn't come back and gives us a break of structure in this area here. Yeah. And look what happens. It barely misses it, but then it gives us a clear break of structure with this push to the upside here. So where's the last bit of selling? Boom. Right here. That last bit of selling, grabbed this liquidity, and then broke structure to the upside. And you can have setups in this area right here. And let's just see hypothetically how 70 pips, right? 70 pips off of that daily setup. Not bad. Not bad at all. Price comes up into this area, right? And then look what happens. A huge push to the downside. So where is our trading range at from here? From here to here, right? We know that price has to retrace somewhat back up into this area here. So there's two areas, right? There's two areas that we can look at. Let's go to the line chart. So we see this point of structure here. And then we see this order block, this last bit of buying up here, along with this inefficiency as well. So we get one setup off of that area, which went 94 pips, didn't give us any break of structure, like it didn't break this low down here, right? And price comes back. Why does it come back? Well, you see, right? If we look at structure, higher high, higher low, higher high, higher low, higher high, higher low. So this is our shift, right? Where's the last clear bit of buying? Right here, right? Price comes down, gives us a high, and then a low, right? Lower high, lower low. Price breaks this area. And where does it come back down to? Right? Giving us that lower, that higher low here. So now we have higher high, higher low, higher high. And that is all because from a monthly point of interest, we had turned bearish in the market. So price comes back up to that area and look, fully completes the overall time frame, lower low, lower high, lower low, right? Because from the monthly, remember, it was bearish from this area, right? So monthly was bearish, but the daily time frame had turned bullish to retrace back up into that area. So bullish, get back up into this area here for our entry, and then I'm sure on the lower time frames there's probably setups in these areas here. Didn't touch, price comes back, see, point, structure, boom, right? And then we continue to go lower. Price retraces off the high supply, another high supply right here, boom. These are clean setups, guys. So from this high to the low would be our TP, 104 pips, not bad. Shift in market structure here, price doesn't retrace, price doesn't retrace, price finally retraces here. And then also even another setup right there as well. Clean setup. Now look, once again, right? We're still on a oh, that was for the future. That was for the future. But look in this area right here. So price rejects around this area, and there's a high. This high gets the liquidity gets captured, and price comes down and breaks this low. You can see there's closes above this, or below, excuse me, below this low here. There's closes below it. You see there's no closes above this high. It's all wicks, it's all respecting this area, right? But there's closes below this. And look what happens. Price doesn't come back up to this area here. We consolidate around, shift in market structure here, and now look. I can't draw a straight line at all. You could be selling in this area right here. Here is that weekly circle that we have. We'll look at this area, I suppose. So where do you guys see from, from the tests of this monthly area, where do you guys see broken structure at? Did this high, bro? Did this high break this structure? No. Did this high break this structure? Yeah, I guess you could say so, but then look, it comes right back down. Did this high break this structure? No. Did this high break this structure? No. Did this high break this structure here? Yes. And where does price come back down into? Clean move, right? So you could be buying, say you have your first TP at the next previous high. So entry point down here, first TP would have been 89 pips. And now say you're taking this up into that monthly area that we were looking at, which is 270 pips from here. Now what happens? Yeah, see what I'm saying? You guys remember these circles that I did? Said that there could be possible setups in those areas on a lower time frame. Well, look. Here, right here, and it still didn't even hit it. Right here, price didn't come back down to this area here. I'm gonna erase these because it's getting messy. Yeah, and you see price didn't come back as well on this setup, right? And it's nothing to get mad at. It happens, right? It's how trading is. It happens. So what are we looking at? This was that huge area of consolidation. And where did we have a, let's see, we have a weekly point of interest in this area here. Nothing really like super clear in this area, but you do have a heavy buying candle and then a push back to the downside that broke structure. So you could be selling in this area. We get another minor break of structure here. Last buying, sell there, just sell there, breaks structure, and price doesn't come back into that area. Breaks through it. And here's a way to tell that that price is possibly not going to reject from that area, because once we got down to that weekly point of interest right here, right, that we were looking at, damn, that's crazy. So once we got back down into that weekly and daily point of interest right here, right, that we were looking at, look at what happens. So we don't get a retracement right away from this area here, okay? But look what happens. We get a push to the upside, and then another low, which is respecting that low, right? And then look, this high has a close just a little bit above that. So where does price come back down to? This area. You could be buying in that area here. Now, what do we have? So we have a weekly area that we were looking at. This cell here, where that circle was. So our weekly point of interest from somewhere over here on the weekly time frame, right? And look at what happens. Let's go to a line chart, right? Does price get up there? Nope. Does price get here? Nope. Does price get here? Nope. Well, maybe. Let me check. Okay, so it does. From this area here. So it's like you start seeing lower low, lower high, lower low, lower high, lower low, and then price comes back, gives you that nice entry. So here's a setup that I want you guys to pay attention to. So where were we waiting for, right, from this bearish activity, this bearish order flow on the daily time frame? Remember, guys, from down here all the way up here is one, it's a trading range, right, for our weekly point of interest, our monthly point of interest. But you also have to understand, the monthly time frame was bullish at this point. So what do we see, right? A huge push to the upside. And now price has to shift structure. Oh shoot, where am I at? I'll get to that actually. Sorry, I'm talking about this area here. Sorry. So price has to change structure, change order flow to get to a point of interest, right, on a higher time frame. And what do we see here, right? Liquidity captured from this move down, rejects off of that monthly point of interest, breaks structure back up into this weekly point of interest. Does it come back down? No, it doesn't give us a setup. But look at what happens here, right? We have a break of structure here, and price retraces back into this area. So sometimes when I have, let's say, I can't draw it perfectly. When I have a order block, right, and then price breaks that structure, sometimes I don't even sometimes I like to wait and see if price will give me a break of structure from that order block, so then I can come and take the next setup originally here and not even enter in this area here, right? Just like in this setup here, we have our our monthly rejection, price pushes to the upside, comes back. I wouldn't enter in this area here, but then we get another break of structure and a retracement back down into this area here. This was our weekly our weekly point of interest. There's nothing like super clean in this area, right? There's a minor break of structure here. I mean, this candle did close above that, but if you look on I would say probably the 4 hour would probably be your best time frame for this setup, right? Price does come back, dips, and then it comes back here. But in this area here, right, you can see that this respects this area. And now we have that trading range from this low to this high. Price has to come back, right? Well, it doesn't have to, but it tends to. There's a lot of tendencies that the market likes to do. So in this area here, there could be maybe a setup on the 4 hour that is a lot cleaner than this. Price break structure here, 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 right? What am I looking at? Oh, okay, so this was a weekly setup. Let me see where we're at. Okay, so we still got a lot of ways to go. Cool. So off of that weekly point of interest, right, we see 1, 2, 3 rejections. Now look, does this first rejection give us a break of structure? Yes. Yes, it does. So where does price come back to, right? You could say that this order block here, yes, there is a huge wick right there. And it probably possibly could have been a loss, but we're back testing and we're doing hypothetical, trading right now. So if you're looking at this, right, just get the imagery in your head, get the structure down, because you're not going to win every trade anyway. You're just not. It's literally impossible to win every single trade. So I think I'm looking at a monthly point of interest here, yeah. See, look, this is perfect structure right here. We have structure broken here, 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 even here, and here. So look, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And then straight up into our weekly and our monthly point of interest. Now look at the rejections. So let me delete that and that. So look at our first rejection here, right? Did we get any break of structure? No. Look at our second rejection here. Did we get any break of structure? No. But look at our third rejection here. Did we get any break of structure? Yes, we did. Now here's something that you guys could use just for this example here, right? From the low, excuse me, from the high. Go back to the weekly and see. Oh shit. Damn, I lost my spot. I think I was right around in here. What was I gonna do? From here, this rejection, right, gave us a break of structure, right? And what does price do? So you guys can use your fibs, and you guys know about equilibrium. I'll turn that on here in a second with the 50, right? You guys can see from this trading range here, this high to this low that broke this structure here. So if we draw a point of interest from that broken structure in that area, which also it kind of gives us a drop base drop as well in that area. And I know there's a lot of lines going on right now. It might be messy to some of you guys, so try and stick with me here. But you guys can see the red from the fib, that's the equilibrium, the 50%. Price does go up into that area and reject. Yeah, it does it again too. Kind of crazy. The price goes up into previous broken structure around the equilibrium and rejects again, right? So let me delete that. All right, let's look at some more setups that we were already looking at, like on the from the higher time frames where we already had drawn our point of interest at. So see here we have this weekly, which is the blue line. I'll delete that for a second. From this high to around these lows, right? This is our new trading range. So from here to here. And what does price do? It comes back up into the highest point of supply and gives us a nice rejection. And then you take this back down to the low here, right? So from that high to the low, 240 pips, 250 pips, right? With very minimal drawdown. 3, 4, 6 pip drawdown for a 250 pip trade. You can't, I mean, it's inevitable. You really can't, like, you can't get any better than that. The risk to reward on these setups is undeniably, you know, the way to manage your risk. Undeniably, sorry. Doesn't hit. Let's see. We have a weekly setup here. I think this was that inefficiency, yeah, where price rejects from this area as well. So on a lower time frame, there's probably some sort of minor break of structure, retracement, and you'd be entering like around this area here. And then you see price finally break structure to the upside, right? And then back to the downside. think we're in that far area down here on the monthly where we were waiting for price to retrace back into that area on that larger scale demand level, on that monthly demand area. And we can see here on the weekly with the blue, right? The blue was the weekly, right? Nothing really clean, nothing really like super clean down here. Which, you know, maybe right here would have been a good setup, but there wasn't really any break of structure except right here. Price does kind of come down into this area. It's not the cleanest. Here we go. Here's some inefficiency play right here. So this is really clean. This is really clean. So we had this huge push, this huge rollover to the downside, and price comes back, hits 50% of that inefficiency, which you can see it was from the weekly time frame. We can go back and look at that just to refresh your guys' memory right here, right? So you see from this wick to this wick, there's you know, there's not a wick that comes back and like retraces into this area here. So we go down to a lower time frame and we wait for a rejection from that area. And what happens? Price gives us a rejection, pretty fast, right? Pretty fast, volatile move back to the downside, leaving that last bit of buying, right, before the sell-off. And we could be looking in this area maybe for the lower time frame break of structure, lower time frame entry, and yeah, you would make money. TP would be down here at the low. Say you're buying here, and or excuse me, selling here, 337 pips, 340 pips or so. Not a bad setup at all. Let's go to our next weekly area. So look, this was that weekly area that we had looked at. We had seen this huge push and then back down super quick, right? Like this. And price doesn't reject from that area. But look at what happens. From that area, we got a shift in market structure. Let me delete these lines, these X's, so we can see. Right? Cleanly. Okay. So, you see that first push away, not really a the rejection that we were looking for. So this isn't really like super clean, but there are moves up here that could be, potentially giving you some profit. Then we have that monthly point of interest down here. Look at, let me see here. Let me go back on the weekly and let me look at this area here, right here, because I think we might have missed something, and we did, right? So look, price comes down, makes a low, and then gives us that higher high. Why is it a higher high? Well, this high, right, is higher than this high right here, right? And look at where this goes. Damn, that's clean, right? That's super clean. So we go back down to this area here, right? And it's on the weekly. So let me change that back to blue so we don't get confused. Then we'll go back to red. Now we go back down to the daily and watch this. See how it was that last bit of selling right here? Right here, and then that huge push to the upside. And look at how price rejects from that area, from that weekly point of interest. Clean, pretty clean. From here, 0 pip drawdown would have taken this to the high, around 200 pips. Very, very clean move. Would have taken an L there. Oh, here we go. So here is a weekly point of interest as well. There might even be a daily point of interest here. We'll have to check. Yep, yep, exactly. So weekly point of interest, look what happens. So from this weekly area that we see, right, we get a nice rejection from that area, and we have a low and then a higher high. Why? Because it's higher than the previous high. So structure had gotten broken, and then this is our last bit of selling before the broken structure. So what happens? Price rejects from that area very cleanly to this high, 120 pips or so, around 120 pips. So you would have made some pretty good profit around that area as well. How much more on this? Okay, so we're almost done on the daily. And then I think I'm going to do a little bit on the 4 hour and then hop off of here. Just marking up some more areas that I see that look significant. they're so clean, even without seeing the wicks. Like, just understand the line chart as well. All right, so that was the daily time frame. Now let's go to the 4 hour, and let's go back maybe let's do a 2 year period. So here is the start of 2021 right there. So we'll just start right here, right? So our first area was that daily. We see the weekly got rejected off of there, and price had came back into that area and rejected here. So let's do whatever color this is, purple, pink, purple. So we get a rejection here off of the 4 hour, right? And look, we have a break of structure. Price slightly closes above that area. Last bit of selling before the buy, and we get a wick rejection and a nice push to the upside, right? Up here. Price comes down, makes a low, doesn't come back up, right? Breaks structure, price comes here and rejects. You see how price broke structure and didn't reject from that area, right? We get that shift in market structure here. Price breaks structure here, but it doesn't come back into that area. It does fill this inefficiency with 50% though. So you could look at moves like that. But then price ultimately continues higher, gives us another break of structure, which we can see here, back into that area. This last down move before the break of structure, price comes back into that area, gives us a 5 pip drawdown for 78, 80 pips. So very good risk to reward. Yo, if you guys are liking this backtesting session so far, give me a like, subscribe to the channel, keep me in the algorithm, give me a comment down below what you learned, what you found insightful. You know, if this is helping you guys at all, if you guys like these type of videos, let me know. We could do some more backtesting videos for you guys. You know, just trying to help you guys out, make you guys the best traders that you could possibly get to, and you know, just try and give out as much free knowledge as I possibly can for you guys. See how I did that without even looking at that? I knew that this strong rejection right here, I knew that there was a wick right there. We go back to the candlesticks, and it's, you know, trading isn't hard, guys. Trading is, you know, a lot of it is up here, and you guys need to practice maintaining your emotions to understand what you're looking at on these charts. I had my little brother over here. one day, and I was looking at Bitcoin. I was looking at Bitcoin, and I was trying to show him what I was looking at, and try and teach him some things. And I remember looking over at him, and he's like this. And I remember looking at him, and I'm like, "You don't understand anything that I just said, did you?" And he's like, "Nah, I don't understand anything." And it's like, dude, I know some people that have been trading for two, 3, 5 years, and they still don't understand these markets. They don't understand how the market actually moves, what you need to look for, how they try to manipulate you. They don't understand. I remember crazy story real quick before we finish this off. I remember a guy in one of my old mentorships. This was even way before outcome reach. This was before outcome reach. But I remember a guy in my very, very first mentorship program. He had been trading, I kid you not, I can't make this up. He had been trading for 16 years. He had been trading for 16 years and never made any money. Never made any money. And he joined my mentorship, and within the first 2 months, he had already understood the market a lot better. He was starting to actually make money. He, I was so surprised that he had been trading for so long, but yet been, very unprofitable. And I told him straight up. I was like, I give you props for even sticking with this trading, because I know how stressful trading can be, especially when you're not making any money. Because we've all been there. We've all been on these charts, and maybe had learned something, tried it, didn't work, a new strategy, a new technique, a new indicator that you might have seen somebody scamming you in. And for somebody to stick with this type of field for 16 years and not make any money uh, in trading is crazy. It's so crazy. How much more we got? Okay, we don't have that much more, because I'm gonna hop off here. So let's get back to looking at the points of interest from the higher time frames that we were looking at. So right here we see our daily, right? Our daily point of interest. But if you look closely on the 4 hour, right, we can even go to the line chart on this. You see this last point down before this huge push to the upside? Well, if I take a line and I go across like this, see, that's a nice setup. Now, look, say you weren't paying attention. Say you weren't paying attention to this 4 hour and you saw only the daily, right? And you start to see that rejection. You start to see that price is rejecting and moving away from your daily point of interest. Well, look what happens around here, right? We see a break of structure around this area here, right? And look at where price comes back to. Cleanly around these areas. And then what is this risk to reward here? Literally 0 pip drawdown. First TP around 52 pips, which I would have taken most of my profit around there and let this thing ride up 150 pips. So another really clean setup. Let's see, this was a daily point of interest right here. There's nothing really clean on it though, because I would have been looking right here and price never came back to that area. So we need to look for the next break of structure, which is right here, basically this huge push to the upside, right? Because if you look at this high, it doesn't break this high. Well, let me look. Right there, right? But if you look, right, this high doesn't really break this high. This high doesn't break this high. This high, closes below this. So it's kind of a sideways market in this area until we get to this big push to the upside. Now, what did we talk about in the beginning of this stream? Supply, your highest area of supply, and your lowest area of demand, right? So if we look in this area here, boom, see that? So we could have been buying around in this area here, 116 pips, maybe more, little more, but now look at this. See, this is what I'm talking about. Say, I'm going to draw this very quickly. Say these are order blocks right here. So, sorry for the bad illustration that's about to come up, but try and bear with me. So, say that these are order blocks here, and you have your point of interest. When price comes down into that area, right, you could enter here, or you could wait for a break of structure and then price to come back to enter again for your buy. So sorry that illustration was so bad. Hopefully you guys understand it. But in this area, right, which we see that wick is very beautiful, price breaks structure in this area. You have 1, maybe 2, and then 3 areas where price might come back to this area, right? Break of structure, you see a close above that. Now look, price comes back into that area very cleanly, giving you a 6 pip drawdown, TP right at the high. Let's just go 100 pips. So 6 for 100, I'm not sure what that risk to reward would even be. Let's go 20 pip. Let's go 20 pip stop. You have a 5 to 1. 5 to 1. If you went just a little lower at 15, you got almost even a 7 to 1 reward ratio. What would 10 pips be? Almost a 9 to 1. So, these setups are very, very clean. Down here, we have that weekly setup, the blue lines, right? And we can look from this area here, right? So let me draw that rejection so we know where that wick is. You guys see this wick here? We rejected off of this weekly point of interest, this blue line right here. And if we go back to the line chart, right, where does structure get broken? Right here, right here, right? So there's two setups right off of this weekly area. There we go. So first entry could have been here, second one could have been here, and yes, the second one, it would have came back and got you. So what? First entry, 128 pips. The second one, depending on what kind of trader you are, right? Price, you could have made some money there. But I think I'm gonna hop off here, guys. That was a very good back testing session. Hopefully you guys understand some of the things I look for, some of the things I talk about. I know that my way of back testing can be a little bit messy for some people to understand. This is my way of back testing. I don't really care how messy my charts get when I'm back testing because we're all here to learn. We're all here to improve in our trading and get better in our trading. So if you guys would like to see more back testing videos, give me a thumbs up, subscribe to the channel, comment down below anything that you've learned. And until next time, guys, this was fun, and peace out.